All right, let's dive right into B&P's fiscal year 2025 because, wow, it was anything but ordinary. I mean, we're talking about a year of total transformation for them. Record-breaking results, a huge acquisition that really shook things up. So yeah, let's break it all down.
So here's how we're going to tackle this. First, we'll look at the incredible results they posted. Then, we'll dig into the growth strategy that made it all happen. After that, we'll cover the game-changing acquisition, check out their plans for the future, and wrap it all up with the key things you as an investor should be thinking about.
Okay, let's kick things off with Section 1, a landmark year for B&P. And really, that subtitle says it all, record results in a transformational year.
I want to start with just one number because it really tells you everything you need to know, 111.1%. So what is that? That's how much B&P's operating profit blew past its own forecast. I mean, they didn't just meet their goals, they absolutely obliterated them. That alone tells you this was a remarkable year.
And here are the headline numbers that back it up. For the fiscal year ending in October 2025, we're looking at sales hitting almost 4.5 billion yen. Operating profit, a solid 701 million, and net profit came in at 491 million yen. You know, these are just incredibly strong figures across the board. But, and this is the really critical piece of the puzzle, this is the very first time B&P has ever reported as a consolidated group. What that means is these numbers aren't just from their core business, they actually include a huge new subsidiary. And that, well, that changes everything. All right, Section 2. We've seen the what's, those amazing results. Now let's dig into the how. What was the engine of this growth? Well, we need to dissect their core business strategy to find out.
Look, this kind of success doesn't just happen by accident. It's all by design. B&P has this really clear three-part strategy. Think of it like this. Step 1 is share expansion, basically getting more customers. Step 2 is function expansion, adding new services and tools. And Step 3 is domain expansion, which is all about breaking into brand new markets.
So, this isn't just theory, right? They put it into action. To expand their share, they invested heavily in their sales team with better training and new support tools. To expand their functions, they got into some cool new tech, partnering up with ZK Digimax for AI-powered digital signs. And to expand their domain, they beefed up their promotion AR service for the tourism sector and also grew their business making goods based on popular intellectual property.
And this is maybe the most telling slide of all, because you might be thinking, okay, so the growth all came from that acquisition, right? Well, no. If you strip that acquisition out and just look at B&P's original core business, it still had a record year. Sales were up over 11%, and operating profit shot up by a whopping 28%. That tells you the foundation of this company is incredibly solid.
Okay, that brings us to our third section, the game-changing acquisition. That rock-solid core business we just talked about, it set the stage for this massive move, bringing IDI Company into the fold and building a true powerhouse. Now, we mentioned consolidated reporting before, so let's just make sure we're all on the same page. All it means is that the parent company, in this case B&P, and its subsidiary, ID, combine all their financial numbers into one big report. You're no longer looking at two separate companies, you're looking at them as a single unified group. And they move fast on this. I mean, look at the timeline. They acquired Ideal in November 2024. By December, it was on the books for financial purposes, and less than a year later, in September 2025, they were already moving Ideal's Osaka team into B&P's main headquarters. That's a huge step for getting everyone on the same page and working together. Okay, another bit of accounting speak you'll see here is goodwill. So that 58.2 million yen, what is it? Well, when you buy a company, you're not just buying its desks and computers. You're buying its brand name, its customer list, its reputation. Goodwill is the value they put on all that intangible stuff. It's a bet on future success. All right, Section 4. That was the look back at an incredible year. But the big question is, where do they go from here? So let's check out their blueprint for the future, which is all about ambitious goals and strategic investments. And yeah, they are definitely not playing it safe. Their goals for the 2026 fiscal year are big. They're targeting 5 billion yen in sales and 750 million in operating profit. You don't set numbers like that unless you are really confident that the momentum you've built is going to continue.
But hang on. If you're looking closely at the forecast, you might spot something interesting. Sales are projected to grow by over 11%, right? But profit growth is slower, at just under 7%. So what gives?
Why isn't profit keeping pace with sales?
The answer is this number, a 60 million yen hit to the bottom line. This is a one-time cost. What are they spending it on? They're making a big strategic investment to combine all their Tokyo offices into one big creative hub. So it's a classic case of short-term pain for long-term gain. It costs money now, but it should pay off big time down the road.
And that new Tokyo hub is just one piece of the puzzle. They've got a few other big growth levers they're planning to pull. They're launching new high-end packaging solutions like gift boxes and paper containers to really tap into that e-commerce market. They've also said they're on the hunt for more acquisitions, and they're pushing ahead with their smart factory idea to make everything more efficient and profitable.
Okay, let's wrap this all up in our final section, key investor takeaways. After everything we've seen, what does this transformation really mean for stakeholders? What's the bottom line?
At the end of the day, a lot of this comes down to shareholder returns, right? And B&P is delivering. Just look at the annual dividend. It's a beautiful upward trend. 60 yen in 2024, 80 yen in 2025, and they're projecting 87 yen for 2026. That is a crystal clear signal that they are serious about rewarding their investors.
And it's not just about the financials, it's about their whole mindset. Their vision statement says it all. To create the competitive advantage of the next era with a one-of-a-kind approach in the world. That's not a company that's content to just follow the pack. They want to be a totally unique leader. That's some serious ambition.
So if you take away just a few key points, let them be these. First, this was an absolute banner year for B&P, driven by a strong core business and that smart acquisition. Second, their three-part growth strategy isn't just talk, it's getting real results. Third, they have ambitious plans for the future and they're backing them up with real money. And finally, they're making sure shareholders are seeing the benefits through a consistently growing dividend.
Look, there's no question B&P has pulled off a massive and successful transformation. They've built something new and powerful, and they've got the record-breaking numbers to prove it. The stage is set. So the big question now, the one we'll all be watching, is this. Can this newly formed group keep that incredible momentum going and turn one spectacular year into a true era of long-term, sustainable growth?